Hey guys, welcome to the show. So, I recorded this and I realized it was way too long. I talked too much, so I'm going to be quicker and briefer throughout this entire thing and try to keep it under 15 minutes. Now, this comes from Blockworks. PayPal discloses 1 billion in crypto on their balance sheet. So their 10Q filing, they held Bitcoin, Ethereum, Bitcoin Cash, Litecoin, $943 million worth altogether. Now, this is a big increase from last time where it was 339 million in customer crypto assets. Now, if XRP was labeled not a security, right, and it was offered on PayPal, I'm sure some of that would trickle into the XRP market. But for now, that doesn't happen. Now, this is David Malpass. David Malpass from the World Bank. He was one of the key guys in the great financial crisis, mind you. He was part of that. So listen to what he has to say.
Working, we see high demand, consumer demand in the U.S. I think the Fed should, and central banks in general, should be using more tools, not just the rate hike tool. That means talking about how the interaction of monetary policy with production within the economy. When you're hiking interest rates, you're reducing the production, and we saw that in the credit data today. Credit growth goes down when you hike the rates, and you get less production, and that keeps the persistent inflation that we're seeing in the core inflation numbers. Still 5.6% year over year core inflation. So these are big challenges in trying to look forward and change the way policy works so that it allows more production and lower inflation.
David, on top of all of these...
So how are they going to have more production, less inflation, right? If the problem is they gave out stimulus checks, they did QE, they did all this crazy stuff, unheard of amounts of money printing, and now they're burning money from the money supply. This guy was one of the key guys. He's in the inside loop, and he's telling you they're trying to boost production, right? So central bank digital currencies, crypto assets, this technology removes middlemen, removes friction from the equation, and that trickles down to the consumer. And some of these projects, just with like trade finance and everything blockchain, removes a lot of these problems and increases efficiency. Therefore it will increase productivity. So he's cushioning everybody up to say, we can have a little bit higher inflation. We just need to make things more efficient. So that caught my attention. Now, this piece of information comes from XBT_AG. Now, listen. So I'm going to have to turn the music off while I'm playing this because it is a licensed song that I don't have the copyright for. But anyway, this is U.S. regional banking collapse. This is what's happening right now. Each one of these bubbles are a bank, and you're seeing from start to where we are now. You see how these are starting to crumble? Everything was on this straight zero line, and now you're starting to see banks turn different colors and drop down. This is because all of the bank's assets have taken tremendous hits. You're seeing equities that the banks have are at our all-time low, back to where they were in 2008, some of these bank stocks. So right now, this collapse is just getting started. Don't let anyone tell you anything different. PacWest just went away. These banks are going to slowly trickle down all to where PacWest is. And somebody is going to have to absorb all of those losses. And right now, JP Morgan's cutting deals with some of these banks, getting good deals. But that's only going to last for so long, and they're not going to have enough liquidity to bail everybody out. So that leaves the Fed.
Well, that's true. I mean, look, we don't relish the opportunity to be in litigation with one of our primary regulators. We've sought out regulation all over the world and tried to be proactive when there wasn't clarity. But if there's no clear rule book in the U.S., we created our own best practices to evaluate, over 1,000 assets, and we rejected 80% of them. The 200 or the 20% that we list, we believe are commodities, and there's been no clear rule book. And so if we receive a Wells notice, I feel like we have a duty to push back and go seek case law that will help bring this clarity to the U.S.
I mean, I fiddled around with this question for about 2 hours. SEC, CFTC. What is the question you asked the CEO? And here's the question. Are these regulators still fit for purpose?
Well, I think there's certainly a role, yes, because crypto is many things. Crypto has commodities. Crypto has some that are securities. We don't list them, but there are some out there. Yeah. We think there should be a robust, healthy market for that. There's also stable coins, which are more like currencies. There's artwork, with NFTs. And so crypto is going to have a number of different regulators. It probably is going to need new legislation to be passed in the U.S. And the good news is there's broad bipartisan support in Congress for that exactly to happen.
Can you see a day where you go, look, troops out, I'm gone from the U.S.?
We're not going to leave the U.S. We do have a choice of where to invest our dollars around the world in any given moment, but we're not going to leave the U.S. It's an important market, and the good thing about the U.S. is there's rule of law, and so we do reach the right outcome eventually.
We will reach the right outcome eventually. So this entire thing, Gary Gensler, the SEC have picked fights with the giants in the crypto industry, Ripple and Coinbase, and it looks like they have no choice but to fight back now. For a long time, crypto has been kind of on the outskirts. There's a little bit of lobbying money coming from Coinbase and Ripple, not too much money, but as the space started to grow, the SEC came in and started shaking down these companies. Well, they picked a fight with 2 giants, and there's no choice but to defend themselves. And this is Brad Sherman. He is one of the big critics of crypto. And what I find particularly humorous about it is that the analogies that he uses, he compares crypto to drug harvesting or organ thieves and just like really horrible things. But his primary argument is like he wants the dollar strong. He doesn't want anyone to get out of taxes, and he wants the dollar strong. So listen to this part.
And your answer, I mean, you mentioned a South American country that apparently produces a lot of cocaine. I can't remember which one, but I'll trust you on that. I would guess that rich Americans, though, consume the vast majority of that product, right? And it's difficult for us to regulate it if we're not involved in the industry. Why wouldn't you want to create the regulation here? Because regardless of what you do, consider Bitcoin a security or not, Americans are going to be buying it and trading it.
A lot more Americans will buy it and trade it if they can do it here than if they know that there's a system designed to protect investors, and they're evading that by sending their money to the Cayman Islands. So we want to minimize the amount of American investment, and you do that by having effective regulation that, as you say, will push this industry offshore, because they don't want clarity. They don't want effective regulation. They want a patina of regulation, the image of regulation, and that's why they're fighting the clarity that they could get by simply identifying cryptocurrencies as a security and having a much larger and more effective regulatory agency be the regulator. No, we're not going to have the same level of investment in crypto if whether crypto is traded in the United States versus whether it's something that investors are warned every minute that they deal with it, that this is something their country doesn't want them to do.
So if you notice, he said that he wanted crypto to be under the SEC. He labeled it a security, right? So the SEC, in order to trade stocks and equities, right, you have to go through a pretty tough KYC AML thing. Their platforms are very tax connected. You get forms after you trade equities at the end of the year that you have to send into your tax to the IRS. So it sounds a lot to me like these politicians that are anti-crypto are not necessarily trying to ban it. They're trying to get everything underneath the SEC for really easy control. So if everybody had to go through TD Ameritrade, Robinhood, all these different stock brokerages, and that's how you're able to invest in crypto. Then they have control over taxes. They have control over AML, KYC, all of that stuff. The problem with that, though, is like the XRP that I own. If I wanted to trade for an NFT, if I wanted to build an NFT project, if I wanted to build a project like Spend the Bits, where I'm building a company based off the ledger, you can no longer do stuff like that, right? Because it would only be an investment. It would not be an active thing, so you couldn't really interact with the token. So some big news came out of Quant. This looks like Quant were important participants in Project Rosalind, says Tom Mutton. Watch this space for Project Rosalind report coming out shortly. So the Bank of England had a project called Project Rosalind, and it looks like they tested Quant's overledger. So I bought Quant a really long time ago, and I'm still holding on to it. I haven't touched it. Something I follow, and it looks like they're making some strides with some of these central bank digital currency projects. Now, again, here is Brian Armstrong from Coinbase.
Right answer, which is that there was the bank failures in the U.S. did cause people to look again at crypto and try to think about this as an alternative system. That just zooming out, I think that's the most important thing people should think about with crypto, is that this is a technology that can be used to update the financial system and improve it in many different ways. And the financial system is in major need of an update. We've seen this from customers we talk to all over the world. They feel like the current traditional financial system is too slow and the fees are too high and people don't have equal access. So that's really important. Crypto is a technology that can update the financial system.
Crypto is a technology that upgrades the financial system. The financial system is breaking, like I showed you with all the banks failing. It is breaking down. And at the same time, we're trying to push crypto regulations. We're trying to have everything upgraded. So everything is being upgraded. As the old system breaks down, crypto reinvents this system. Right, so keep that in mind. If this is a plan, it would make a lot of sense from timing purposes. Now, this is Brad Garlinghouse of the Dubai FinTech Summit. I've been looking all over for this, so if you find the full video, be sure to DM me on Twitter and send it to me.
Message to the SEC chair as you sit here in the UAE and in Dubai announcing an expansion of your business to this region, given the state of regulation in the United States right now.
Who? No, I'm kidding. All right, so look, we were talking about this a little bit earlier. I find it as a company that started in the United States, and as someone who's a U.S. citizen, it's sad. Like, I have sadness about this. The U.S. is getting passed not just a little bit, but by a lot. And but the tough thing about this is you have a country that I think has put politics ahead of policy. And, that's not a good decision if you're trying to invest in the economy. You're seeing it, certainly here in the UAE with VARA, the Virtual Asset Regulatory Authority, certainly what's happened recently in Europe with MiCA. The United States is definitely stuck. And Ripple, the case with the SEC, we will spend... The first time I've shared this publicly, by the time it's said and done, we will have spent $200 million defending ourselves against a lawsuit, which from its very beginning, people were like, this doesn't make a lot of sense. You have video footage of the chair of the SEC as a professor at MIT saying 75% of these digital assets are commodities. And now he says they're all securities because he's the head of the SEC and he's seeking power and he's putting power ahead of sound policy to grow an economy in the United States. Blockchain technologies are being invested in and pursued in the entrepreneurship outside the United States. And one of the first pieces of advice I give entrepreneurs when they come and ask me, getting something started, I'll say, if I were you, I would not start in the United States. And I think there's a lot of US-based companies and even US public companies that would agree with that.
So, $200 million going to Mary Jo White's firm. She's a former SEC official. She knows the ins and outs. She knows, she has the confidence level to talk to Gensler, right? She knows exactly what he's thinking, how he's thinking, the protocols that have to be done, what they have, what they don't have. And still, it cost Ripple $200 million. Now, this is $200 million that could have went to development, that could have went to expanding products, to giving to customers, right? There's all these different better uses of the money, but that's just on Mary Jo White's fees, right? Like once this settles, there might be a fine where they have to pay even more than that. So a tremendous tax. Now, the SEC is going after Coinbase. It looks to me from a lot of the tweets that I'm seeing from different key influential people in the crypto industry is that the crypto industry is kind of coming together and they have some type of plan to go back at the SEC. So Ripple winning this case will be pivotal for the rest of crypto at large. Now, this is Tom Emmer. He's a congressman that's anti-central bank digital currency. You saw Ron DeSantis from Florida talk about an anti-CBDC act. Tom Emmer supports those types of acts. So listen to him.
I want to hear your view on that. Is there any way to do it in a way that protects privacy?
Not right now. But I think to be thoughtful and to be honest in the debate, you could certainly pick one side of it and say never, this is never going to be possible. But if, and I've said this even before we introduced the bill last Congress, we've been saying this since we started advocating for this. If you can legitimately create an open, permissionless, and private version that does emulate cash, well, then I think we should be open to looking at that and understanding it. I don't think you jump in feet first and say I'm all in, but you should keep an open mind for that. At this point, JW, no. I don't see any way that they can create an open, permissionless. And by the way, they came out shortly after we started talking about this a couple of years ago and said, well, MIT's done it. Well, yeah, but that's a centralized a digital currency. That is just the opposite of what we're talking about. We're talking about decentralized. Decentralized is the key, and perhaps that's why it is a little bit disturbing to those that enjoy the control of the central authority.
Right, those that control the central authority, which I completely agree. The central banks have gone way too far just with monetary policy, just with borrowing, the government borrowing as much as they have. But with that being said, the XX network, is working with the SNB BNS to create private central bank digital currency, a CBDC that acts like cash, that can't have negative interest rates. Some of those core principles that we want in money that is trying to be built with the SNB BNS, which is Switzerland. So if anybody knows Tom Emmer, I invite him to come on to one of these Twitter spaces where we could discuss the topic. But this Friday, David Chom, the CEO of Panther Protocol, which is Ali, the CEO of the Lydian Foundation, and the CEO of Findora are all coming together on Friday to discuss privacy, data, the whole entire technology that's happening before us. These are really informative spaces. Some of these guys, PhDs, really smart guys, and you learn a lot just interacting with them. So I invite everyone to remind themselves to join in and listen. I will pin this in the description below so you can find it easy. I hope you guys enjoyed this. Please take a moment to like and subscribe. If you enjoy content like this, please consider joining my Patreon. Remember, I have a ghost site, dmjr.ghost.io, that takes Stripe instead of the Patreon payment provider. Thanks, everyone.